each and everyone. Welcome to Time Out Trade YouTube channel. It's your boy, Ellie Daps. Today, I have two stocks I want to talk about. But before I go ahead, disclaimer, I'm not a financial advisor, so please do your own research as investments carries risk. However, I'm going to ask for a small favor. Please hit like, subscribe, and share this channel to someone you may know or someone that you think will benefit from this content. Let's get into it. The first stock I'm going to talk about is a company known as Catalyst Pharmaceutical. Catalyst Pharmaceutical is a development stage biopharmaceutical company focused on the development and commercialization of therapies targeting rare neurological diseases and disorders. So pretty much they deal with neurological issues within adults and children. Looking at the PE ratio of this company is sitting at 8.83%, which is very good. The lower the better. Ideally, I like companies with PE ratio under 25, or I would say under 30. That's fair, depending on where in the growth phase a company is. This don't mean that a company with a higher PE ratio is bad. Because some companies, if they're in a rapid growth phase, their PE ratio will take a time or take a while to match up. However, this company also, I'm gonna break down some metrics that I like as to why I'm gonna invest my money in this company. The return on equity highlighted in yellow is 36%. This is how much the company makes on investors' capital. The profit margin highlighted in yellow is also 36%. This is how much money the company make as a company on a whole. Debt to equity is how much debt the company has in relation to its equity. This company has none, so it's zero, which is very good. Interest coverage, as you could see right here at the bottom right here, the second to last line of the ratio chart right here, is 2.46%, meaning that the company can cover its financial obligation 2.46 times, which is very good. The higher that number is, the more healthy a company balance sheet is. Now, this company is heavily backed by institutional investors. 79.22% of the outstanding shares are held by institutional investors, and 10% are held by inside shareholders, which is very good. The company's 5-year return is 420%. The 3-year return is 41%, and the 1-year is negative 1.6. Now, let's pull up this chart because I don't want to waste your time any further. I was just briefing you on some of the metrics that are outstanding that caught my eyes. There's more to it, but I won't get involved with that at this moment. Let's pull up the chart. Looking at the chart, it was consolidating right in this area for a long time. From October all the way to November, it's been consolidating right in the range of 1999 all the way to 22. It's been in that range. This range right here. Let me put a box right here so you can see what I'm talking about. Let me box it in. So from here all the way to here, that's a consolidation period right here. Boom. It was consolidating a little bit right here as well. From here to here and come down to here. Let me change this box to a different color. So it formed a base right here in the yellow box. Then it formed another base above in the red box before it made an impulsive move up to another base right here. So this is the next base right here. All this is consolidating. All this right here. Let's put that box in a different color. Let's see. I'm gonna put this in purple. So 1 base, 2 base, 3 base. It's been consolidating right here. Now, looking at the bottom of this box right here. This is a strong support right in this area right here. Strong support at 22.22. It's been touching this level over 8 times. Let's count. 1, 2. It doesn't have to be precise to the T, but as long as it's close enough. So 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 12 times, right? I bought 89 shares of this company, as you can see right here, on the 20th, which is yesterday. I bought 89 shares at $22.53. That's my average cost. I'm expecting this one to at least go back to $24.50. That's my target. Now the stop loss, I would set my stop loss right here. If it breaks this level right here at 21.56, which is the purple line right here, I'm out. So let me delete this box, and I'm gonna tell you why I choose that level. Let me delete all these boxes right here. Let me delete them. Now, the reason why I say the purple line, because this was where the first impulsive move took place. If it breaks this level, meaning that there's no buyers holding it up anymore, that means it's going to test this red line right here, which is $20. I'm out to play from there. And let me show you where, because I actually set my stop loss as well. Let me see, where did I put it? Let me see, where did I put my stop loss? Cost base is right there. Turn on open orders. Okay, boom. So right where the purple line is at, as you can see, that's my stop loss at 21.60. And that's my entry at 22.53, as you can see also right there. And I just put it up right there. So that's the first stock that I put some money in on Friday. I'm going to talk about the next stock, which is CPNG. CPNG, known as Coupang, is the South Korean version of Amazon, right? Looking at the insider trades, this one stands out a lot. This guy by the name of Neil Mehta bought $136 million worth of shares in CPNG. When people sell shares, I'm not too concerned about why people sell, because it could be many reasons. But there's only one reason someone buys shares, and it's to make money, right? So when I saw this transaction that took place on the 13th of March, I dig a little bit deeper, right? Now, this guy by the name of Neil, I look him up on Gemini. It says he's an American investor known for a highly concentrated long-term approach to technology investments. Greenox Capital, he founded this firm in 2012 at the age of 27. Now, let's pause for a minute. 27 is fairly young to actually be doing or actually owning a successful investment firm, unless you're born in money. But let's go ahead. It manages approximately 15 to 20 billion with a small team of around 9 professionals. The investment portfolio, his most famous bet was on the South Korean e-commerce giant Coupang, where he initially invested 40% of his first fund, a move that eventually returned billions. Other major investments include Stripe, Figma, Wiz, Discord, Scale AI, Databricks, and Rippling. Okay, this guy is a big-time investor. He have lots and lots and lots of money. Now, when you see he put money in a company as Coupang, he added additional 136 million. He knows more than what we know as retail investors. I like to follow the money, or the smart money, as people would say. Now, let me look at the fundamentals of this company, the key statistics. And by the way, this is bar chart once again. I'm not getting paid by bar chart for promotion or anything. I just like the site. Now, looking at the PE ratio, unlike CPRX that I just covered, this has a high PE ratio. This is off the chain. But if you look at the return on equity, it's positive. It's at 4%. It's not high as CPRX, but it's positive. So they make money in some way at 4% on a small scale. And their return on asset is 1.18, and their profit margin is 0.6. So they're not really exceptionally doing well at this moment. But when you see an investor as Neil put his money, so much money in this company, usually it's fair to say you could probably follow along with a tight stop loss. Now, the company's interest coverage is 7.94, which means it could cover its obligations 7 times, almost 8 times, which is very good. So let's dig into the charts real quick so we can wrap this up. This is the chart right here, and I already drew my channels. So looking at the chart, it's clearly in a uptrend, as you can see. It's in this channel, this upward channel. It haven't broke structure as yet. It came down here and touched it and then reverse on Friday. But I'm watching to see if it holds this line on Monday to make an entry. My entry would be somewhere right above, if it breaks these two candles right here, which is pretty much a base, in my opinion, which is 1920. If it go to 1920 and hold, I'll enter right there with a target of breakout structure, which would be like 2150. So I'll probably buy 100 shares at 1920 with a target of, I'd say 2150. That's what, $2.50. So that's what, $250 on a 2,000 investment. That's like what? That's a 10% move or 10% profit. And my stop loss would set right here, because if it breaks this yellow line, it broke structure. Because as you can see, it make a higher low, higher low, higher low, higher high, higher high. That means it's in an uptrend. Once it breaks this lower low, then it's in the reverse pattern. So I definitely want to get out the trade at this line right here at 1815. So that's just my 2 cents. I didn't dig that deep enough as I normally do with Coupang, but seeing how much money was spent by this insider, which is a big time successful businessman, as well as looking at the basic metric, as well as looking at, another thing. Let's look at the cash flow of this company. They have positive cash flow of 522 million, because you have to add 3 zeros to these numbers. Their cash flow decreased a little bit over since the last quarter, which is, the cash flow decreased since 2024. Let's pull up the quarterly. So their quarterly cash flow is 522 million, and the previous quarter before this, last quarter, was 800 million. However, sometimes cash flow could fluctuate. That doesn't mean the company is doing bad. Sometimes they use the cash flow to expand and research or acquire another business or whatever it is, or to just grow the business. So, but at the end of the day, they still have positive cash flow. So that's my 2 cents. If you like this content, as I said, please hit like, share, and subscribe.